You've made it through the first two steps of the average trader's lifespan here. First, you've opened a brokerage account. Second, you've bought a stock. Now, say the stock is up from the price you bought it at and you're ready to sell. In this example, I'm using E-Trade as the brokerage account. And just like the how to buy, we're going to focus on popular stock Apple Incorporated, AAPL is a symbol, to show how to do that. So first, navigate over to your orders tab and select the security that's in your portfolio that you'd like to sell shares of. In this case, we're going to sell shares of Apple. There's also different things like sell short, buy to cover. These two specifically have to deal with what's called shorting a stock. That's something we'll get into well in advance, well in the future, I should say, of this. But for now, let's focus specifically on how to sell. So we own 100 shares of Apple. We want to sell these shares. Now we can do a few things. We can sell market, sell limit, or we can do a bunch of different things. Let's go over the specifics. So market, to buy or sell a security at the prevailing market price when the order is eligible for execution. Basically, I'm saying I have 100 shares. I'm up enough to where I just want to get rid of the stock immediately, so I'm willing to sell it to the best price the market is willing to offer. Market on close, buy or sell a security as a market order as close as possible to the close of trading for that security on the day of the order entry. So this is okay, as close to the end of the day as possible. I want to sell my securities, but do it as a market order. Maybe I have to step away from my computer. I think that the price is going to continue to remain the same or go up, and I'm willing to trust my computer system that says, okay, as close to the close as possible, sell these shares. Sell limit, you're going to look toward selling your securities at a limit price. You say, okay, well, the highest bid is $111.80. I think my stock is worth well more than that, so I want to sell it at $111.81. This is considered a limit order. I'm limiting the lowest amount I'm willing to take for my shares. The lowest amount I'm willing to sell my shares for is that limit. Select stop on quote, buy or sell a security when its market price reaches a specific stop price. When the security's market price reaches that stop price, the order is triggered and turns into a market order. Similarly, stop limit on quote is to buy or sell a security when its market price reaches a specified stop price. When the security's market price reaches the stop price, the order is triggered and turns into a limit order. For trailing stop dollar, you buy or sell a security, in this case sell a security, when the market price reaches a trailing stop price. The trailing stop price is initially specified in terms of points below, for sell orders, below a security's market price. So the trailing stop price is automatically adjusted as the market fluctuates. And percentage trailing stop, sell a security when the market reaches a trailing stop price. The trailing stop price is initially specified in terms of percentage above for buy orders and below, in this case for sell orders, a security's market price. And the trailing stop price is automatically adjusted as the market fluctuates. So in this case, I want to sell all of my shares immediately to the best price the market's willing to offer. And I want to do that good for the day. I'm limited entirely good for the day. You see, I can't do good for 60 days. I can't do good for 24 hours. I can't do anything but good for the day because it's a market order. The market's not going to be the same tomorrow as it was today. Likewise, if I wanted to set my shares aside and say, okay, I refuse to sell my shares any lower than $111.90, I say this is good for 60 days. So if the price hits me in 25 days, cool, I still have time. At 59 days, cool, I still have time. At 61 days, my order is canceled. Immediate or cancel, fill or kill, let's go over the specifics. We went over good for 60 days. Immediate or cancel specifies an order that will be immediately filled entirely or partially or totally canceled. So I either get filled partially, I get filled entirely, or if I don't get filled at all, it's canceled immediately. Fill or kill specifies an order that will be immediately filled in its entirety or totally canceled. So if I can't sell my 100 shares immediately, my order is canceled. Extended hours, which is anytime before 9:30 a.m. Eastern Time or after 4 p.m. Eastern Time. Extended hours to specify a good for day order that is eligible for execution during the regular and extended hours trading sessions. And extended hours immediate or cancel specifies an immediate or cancel order that is eligible for execution during the regular and extended hour trading sessions. For this instance, I'm going to limit 111.90 cents, good for 60 days because I don't know that this price will get there today. Once I click preview, it'll show me the overview of my trade, estimated commission, and the total proceeds after commissions. I'll click trade and my order will be placed. If I want to check on the status of the order, I can go up to my accounts tab and go to orders to view my pending orders. And if I have any questions, as well as if you have any questions ever on the status of your trade, please call their customer service, whoever your broker is, and they should be able to help you just as easily. So this is how to sell a stock. Please stay tuned for more on our future instructional videos and new tools and all sorts of good stuff that we're planning on coming up next. So again, thank you for watching and stay tuned for more.